The report further reveals that the lowest capital returns or value appreciation in the property residential sector have been in apartments, which have underperformed in not only the stock market but also all other property investments. For investors buying into residential property at the beginning of the decade, their assets were mostly worth 2.83 times more than their original investments by the third quarter of this year, 2010. For those who invested in the Nairobi Stock Exchange at the beginning of the year 2000, their investment is currently worth more than 2 times their initial investment.
These trends have emerged through an economic slowdown as well as through a global recession, accompanied by other shifts in the local marketplace.
Moreover, CFC fund managers believe property is a strong asset class which hasn't been swayed by inflationary pressures, yet largely unexploited. Rental yields in the third quarter of 2010 were 6.4% on rental houses, 7.9% on townhouses, and 7.6% for apartments.
Property has proven to be a more stable, inflation-beating asset class in comparison to its closest competitor and like-for-like, the stock market.
And finally, this is what to expect currently in as far as average price and rentals per suburb are concerned. In Nairobi's Muthaiga estate, average rent stands at 225,000 shillings against the mean buying price of a house of 64.8 million. In Kitisuru, rent is 151,000 shillings monthly, while cost of buying a house stands at 48.7 million shillings, and in Mombasa's Nyali estate, the rent is 61,000 and cost of owning one is about 15.3 million shillings. Zawadi Mdibo, KTN Business Today.